Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. I apologize for the messy and complicated daily chart I have up. I assure you that it is necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May, with the dark blue highlighted bullish shift pitchfork. This pitchfork is still operational, with the market today utilizing the middle time, currently at 261.80, as a base for the recent moves higher. I'll go into the very recent action shortly, but first I'd like to highlight some other larger and longer term patterns. In this, I must discuss the bright red April to date ascending wedge pattern. Currently 237.80 to 264.55. This pattern has been biding its time since late spring until 2 weeks ago, when we saw a significant push up over the upper time. This is highlighted in bright red, this pattern. I'd also like to discuss this in a little while, as we have one more pattern highlight. There's a new 2-week-old pattern I drew. The early August to early September purple highlighted bullish Andrews pitchfork. On this last one, the market is currently in between the purple middle time above, currently 275.20, and the purple lower time below, currently 258.40. Okay, so the break higher, up and out of the bright red, large, ascending wedge pattern is the key event. If this break higher is sustained, which it does look so right now, then we would have a primary target X in the 307.40 area, which is at the moment above the high on my current daily chart. And we'd also have a secondary, harder to reach target X1 up in the 333.55 area, an area that is very high up off my daily chart. It all matters if this move up is sustained or not. And for now, the question is still somewhat open. If it is, then the pressure will be on, first off, on the untested purple, quite acute upper time, currently at 277.85, in possibly the very short term. In the longer term, it will be the dark blue upper time, currently 291.15. Now, we also have in the way the congestion at 285.20 and the September 2011 high at 291.05. But I suspect all eyes will be on whether the market has the legs to reach targets X and X1. In truth, there is enough ammunition below to give prices a good try at reaching them. But it all depends on this move up being sustained. And for the moment, we are seeing the July 2011 high at 271.85 capping prices. The immediate interesting date to watch is the crossover of the purple lower time and the dark blue middle time on about this Friday, the 4th of October. Next would be the purple upper time crossing the July 2011 high on the 14th of October, and the dark blue middle time crossing the July 2011 high on the 4th of November, or thereabouts. Meanwhile, on the downside, beyond the purple lower time, look to the congestion between 241.05 to 243.40, and a nearby short medium moving average, currently at 244.95. And then the bright red lower trend line, currently 237.80, of the ascending wedge pattern with the rising medium moving average below, currently 235.40. And then after that, the dark blue lower time of the bullish shift pitchfork, currently at 232.5. This dark blue lower time is the gateway to a whole load of congestion, stretching from 236 even down to 216.25, which I will detail if we start coming close to it. London coffee. Prices made a peak in late April and the low in early May that set up the opportunity for me to draw 14 weeks ago a bullish Andrews pitchfork for the late February to early May action. 8 weeks ago, because of market actions, I finessed this bullish Andrews pitchfork into a shallower bullish shift pitchfork for the same move. I was 2 weeks ago looking to retire it completely given more recent market actions. However, I have kept it on specifically because of the way the market is crawling along around and on top of the upper time, currently at 49.71. Another pattern to emerge from these actions, and highlighted in bright red, is the late April to early September, quite large, ascending wedge pattern, currently 437.40 to 50.43. The lower trend line has been further reinforced by the rising medium moving average, currently also 43.92. Whilst the upper trend line had the benefit of being just above the dark blue upper time and was briefly breached in late August, imperfectly I might add, but was properly breached 3 weeks ago, and so far the breach has been sustained, though it has not been, as far as I can see, a complete break of it. Additionally, and this is key to showing how we've gotten to where we are now, we had the weekly key reversal up seen in the first full week of August. This led to the creation of yet another pattern, an August-based purple highlighted bull channel, since morphing and finessing into an early August to date rising expanding wedge pattern, currently 52.84 to well up off the top of my daily chart. I will speak more on this pattern shortly, but I wish to point out how this all in turn led to another pattern, a monthly key reversal up we saw in August. Thus you can see that there was not only a lot of concentrated in that 46.82 to 51.48 area, but each pattern has a link to another and another and another, and together they helped prices ride higher. Thus 2 weeks ago I laid out some topside targets for the large bright red ascending wedge pattern. We have a primary target X in the 60.29 area, and a secondary, much harder to reach target X1 up in the 66.57 area. Both of these targets are above my current daily chart, though you can see one just peeking underneath it. Now, to go back to the purple rising expanding wedge pattern, the market is now trying to exit on the downside of this, contrary to the large bright red ascending wedge pattern. Now, my initial thoughts are that this market could quite possibly be exhibiting cognitive dissonance in having two contrary opinions at the same time, with all the discomfort this may bring. It could be that short term we see a move back within the bright red wedge pattern before a renewed attempt higher to fit in with the larger pattern. Now, I will not set up any targets below as we have not qualified for this as yet, but let's call it a potential for this. I choose that word carefully. I choose to regard the action more recently as an original very steep bull channel rather than what looks like a true rising expanding wedge pattern. This is purely because of my natural conservative nature in these things, I hasten to add. So we may have a potential down to the 45.65 zone within a fairly free zone itself, between the middle time below and the rising short medium moving average above. Now, I'm not in love with this idea, and I would retire it in a heartbeat if I thought it inappropriate. But that is what it looks like at the moment.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.